I'm the founder and CEO of Bitbond, and we are the first global SME lending platform. And we use blockchain technologies for payment processing. And at the same time, also we're one of the very few regulated businesses in the space. We operate under our own regulatory license. We're based in Berlin in Germany. And we have an asset broker license according to the German Banking Act. And today I want to talk about two things. One is regulation and blockchain in general, what it means and what kind of impact it may have, and then show you a case study about what we did at Bitbond and what we might all learn from that, because also since we did it, it was also still our first time getting in touch with blockchain-related technologies and regulation. So I'm sure you all know this, so we don't need to spend a lot of time on that. Decentralized applications that use blockchain technologies, and in many cases, create applications that already exist, like payments, like storage, like computation, just in a new way. And one of the ways is that there's no central operator of these services. I'm sure this is all no big news to you. If we look at some examples, there's a conventional tech stack here on the left side, where we have an application like eBay, for example, where we have payments like with PayPal, where we have a programming language like Ruby, then we have computation based on Amazon Web Services. Of course, these are all just examples, right? We could, think of any number of centralized applications here. And then also on the other hand, we've got decentral applications, dapps, that provide more or less the exact same service as we have on the centralized in the centralized world. However, based on blockchain technology and as a decentralized application. So all of these you can, all of the centralized applications and infrastructure you can today replace. Of course, from an application point of view, all of these have disadvantages and advantages. We don't need to go through that right now. The important thing to note is that there are decentral replacements for most applications today already. And then many of those dapps are actually also financial services. So not just applications in general, but more specifically financial services types of applications. Everyone knows Bitcoin, which is obviously one of the things that Bitcoin is. It's a currency. Then we've got Tether, which is like e-money because it represents a certain dollar value. We've got Ethland, which is a completely decentralized lending platform. We've got Neufund, which is an investment platform which invests into early stage projects. We've got Numeraire, which is relatively close to what we know as debt and equity capital markets. So there are many dapps that actually represent financial services. And then there are financial services that use dapps. So they may not be a decentralized application themselves. So when you run an ICO, for example, every conventional company could run an ICO in order to raise funds, and they would make use of, for example, the Ethereum blockchain or the Stellar blockchain, depending on what kind of underlying technology they use for their ICO. But the actual application that they are is very conventional. So eBay, as a wild example, could run an ICO in order to increase their capital base, so they would make use of blockchain, but that would not make eBay a decentralized application itself, of course. And then there are many other types of use cases where a conventional company, a conventional startup could make use of tokens in general and of the smart contracts that make tokens happen. So on the one hand, we have got financial services that are decentralized applications themselves. And on the other hand, we've got conventional applications, conventional companies that make use of tokens and other decentralized applications. Now, let's come to the topic of regulation. Where does this come in? First of all, what is actually the goal of regulation? Typically, regulation has two goals. One is make sure that the financial system remains stable, that there are no big shocks and no disruptions in the functioning of financial systems, and the other is consumer protection. So, of course, what this means in detail is not always 100% clear, but in general, those are the two goals of regulation. And regulators are technologically agnostic. So regulators don't really care what kind of technologies are being used by financial services providers. typically they would simply look at two things: what type of service is being provided and what kind of risk to the financial system, to the consumer, does this service represent. And so these are the two main factors by which regulators look at financial services. And again, this is not related necessarily to the technology that the service providers are using. If you are regulated, what does that actually mean? Probably a lot of you have heard of anti-money laundering, know your customer. These are probably the two primary impacts that everybody is aware of in the relation of regulation and financial services. That means when we sign up with a cryptocurrency exchange, in most cases we will need to register an account and need to identify ourselves. Of course, this is not true with completely decentralized exchanges, which is also one of the reasons why the decentralized exchanges are coming up and are gaining more traction. But with most conventional exchanges like Kraken, Bitstamp, and many others, before you can trade substantial amounts, you need to identify yourself, show your passport, your ID card, or these sorts of things. However, KYC is mostly related to anti-money laundering because the exchanges need to know who is actually making transactions on their platforms. But these are not the only implications from being a regulated business. There are plenty of others. One is audit, for example. Typically, at Bitbond, we need to send in a regulatory reporting every quarter to the German National Bank. You've got privacy protection, which mostly applies to other companies as well, but there are some specific rules for financial services providers. Typically, you would need to document all the processes in your company in written form. So for large corporations, this may not be new, whether they are financial services or not, but for a small startup, it's relatively unusual to document every single process that's happening in a company. There are plenty of other things. We don't have the time to go through all of those. Capital requirements, the management needs to prove that they have the competence in order to run a business, and a couple of other things. So regulation in general means a lot of additional burden that you probably, if you were not a regulated business, you would not do, simply because it takes up your resources and you don't see an immediate use and an immediate benefit for your customers. Therefore, a lot of these things you would probably not do if you were not a regulated business. Now, since I mentioned earlier that a lot of decentralized applications and a lot of conventional businesses make use of decentralized applications are related to financial services, it's nearly certain that regulation will arrive in the blockchain space as well. And in many cases, it already has done that. But in some cases, there are still a lot of providers that more or less ignore regulation. Now, I'm not in favor or against regulation. I'm trying to sort of represent that in a neutral form. But one thing that I'm very certain about is that regulation will play a bigger role in the future of the blockchain space. And this is something that, whether we like it or not, is going to happen. And what that means in particular for a business, I will now show you with the example of Bitbond, the company that I started in 2013. Just a few introductory remarks. Bitbond is an online lending platform for small business loans. It's actually a relatively traditional, conventional business. Lending to small businesses has existed for hundreds, if not thousands of years. What we have done is we've brought it fully online, and we've made it available to a global audience. So literally everyone who has access to the internet can apply for a loan through Bitbond. And when we started that, there was no other single platform that had such a global approach as we did. And the reason we could do that was because we made use of Bitcoin as a payment method. Today, we don't use Bitcoin only. We also use other digital currencies for processing payments internationally. But in general, we have made use of blockchain technologies very early on. And one thing that we asked ourselves was, is this actually a regulated type of service that we are providing here? And we came to the conclusion that there was a relatively high probability that the regulator will say it is a regulated service that we are providing, and that we will need to apply for a license in order to be able to provide that service. And so we did that. This is just a quick overview what kind of businesses we serve. So for example, we serve a lot of eBay and Amazon sellers. We serve restaurants that are selling through Delivery Hero. So small businesses that are typically sole traders, freelancers. Some of them may have up to 2 or 3 employees, but that's around the size. The loans go up to 50,000 euros or dollars in value and are mostly used for working capital financing. So sellers would typically need to finance the inventory that they are selling, and that's exactly the type of financing that we provide. And since we are an international platform, we needed an efficient way to process payments across borders, across continents, and that's why we started out by using Bitcoin. And again, today we also use other digital currencies. One of the actually big parts of our business, which I'm not going into right now because it will take too long and it's not related to the topic of regulations, how we do credit scoring. So we've found an innovative way to use alternative data for credit scoring, but I now want to focus on the regulatory part. So we can skip that because I already mentioned it. Now, what about the regulatory part? As I said, we, that means us, the founders of the business, and our lawyers, suspected that it's relatively likely that the regulator will say, well, we need a license in order to run this business. And so what we did is we have approached the regulator, we described our business model to them, and then they asked questions, and at some point, which actually took them 2 years, they figured out, okay, this is actually a regulated service, and we have to apply for a license. So this took a lot of time. Probably today, the German regulator, so this is a very German-specific view, of course, but I assume many of the learnings can also be transferred to other countries and in the cooperation with other regulators. So it took them 2 years to actually figure out how they would want to regulate us. Once they did that, we decided, okay, we are not moving the business away from Germany to another country, but we actually want to stay in Germany and we want to stay a German company. And so we applied for the license that we had to apply for. The license that we have is called an asset broker license, which actually fits our business model quite well because we are brokering loans between investors and borrowers, right? So that's exactly what we do. And the type of regulation that they applied to us, we're actually more or less happy with. And then, so after they said that we have to apply for an asset broker license, we did exactly that. And that took another year. So in total, from beginning to end, the whole process took us 3 years. And this is one of the things that probably is true for many regulators. As I said, today, the whole process would most likely go faster, but applying for a license beginning to end will only in very few cases take less than 1 year. So one thing that is extremely important, you need a lot of stamina when you interact with regulators because they tend to be a lot slower than what you are used to as an agile startup that just builds things every day and moves on really, really quickly. What are the implications from being a regulated business? Effectively, it's all of the things that I listed a couple of slides ago. We have to do reportings to the regulator. The German Bundesbank is the German National Bank. We need to send in our P&L and our balance sheet on a quarterly basis. We need to have audited financial statements, which we didn't have before that. Right now, we're in a 2017 audit, and that takes around 2 to 3 months and eats up a lot of my resources, a lot of our CFO's resources. As I said, we need to document all of our processes. We need to comply with IT standards. We need to make sure that we identify our users properly. So these are all things that add a lot of burden on our business and where we need to make sure that we have the resources in order to do that. It has also advantages because when you talk to investors, when you want to get institutional investors on your platform or to invest into your company, then this also adds a certain trust element. So it has advantages and disadvantages. And again, I'm not saying whether I like this or not. It's simply a fact that you have to do this. If you want to scale a business to a certain degree in the financial services space, at some point regulation will be relevant for you. And at some point, it will be extremely hard to evade regulation. You could say when you run a completely decentral platform, then it will be very hard for the regulator to track you down, and it will be very hard for the regulator actually to determine which jurisdiction applies. Is there actually a properly registered company behind that platform? all of these things are, of course, open questions. But one thing, again, is really, really certain, that as soon as a business reaches a certain scale, it will represent a potential risk to consumers, to the financial system as a whole, and that will be the latest point when a regulator would come in and would try to regulate such a business. So what are the conclusions from that? First of all, don't ignore regulation, especially once you start scaling, once you start having meaningful business volume on your platform. It doesn't matter what kind of technology you use, deal with it, because otherwise regulators might shut down your business. One very recent example is of all the ICOs that have been running over the last 1 or 2 years, the SEC, which is the United States Securities and Exchange Commission, said that they are going to review whether some of these ICOs have been securities, according to the regulations of the SEC, which would have a lot of implications on investor protection, on prospectuses, on documentation of those things. So this is something that is actually happening right now. Also, one thing that you can do, which I highly recommend, is actually talk to the regulator. So those are also just people that are doing their job. And if you actually cooperate with them, if you try to get a common and mutual understanding of what both sides are doing, it makes your daily life a lot easier. So don't ignore it and wait until the regulator rings the bell at your door, but actually reach out to them and try to communicate to them if you are running a business that has a license requirement. And one last thing is, you can also actually have an impact on the regulation. What I'm doing is I'm getting involved with policymakers. So whenever there's an opportunity to speak before members of parliament, before central bank board members, then this is a way to speak up and to actually explain them the pains that you have as a company to deal with the regulation, right? Of course, this is not to say that you can make sure that at some point there will be no regulation at all. But if both sides gain a common understanding, a mutual understanding of what's happening and what are the pain points on both ends, then this will actually help to perhaps keep the regulation at a reasonable level. And this is something that I would like to encourage everyone who's running a financial services business, communicate and try to have an impact actually on what the regulatory landscape looks like. Thank you. That's it.